2026 is said to be a reset year in Canadian real estate. Not a rebound, not a downturn, but a market finding its footing again. The new annual forecast from Royal LePage gives us a clear picture of where they think prices, buyers, and confidence are headed in 2026, and we'll connect that with how it affects a market like ours that sits just outside a major center. Nationally, Royal LePage is expecting modest price growth in 2026. The price of an average home in Canada is expected to rise just about 1% year over year. Detached properties are expected to rise about 2%, and condos are expected to decline about 2.5%. Sellers adjusting expectations, buyers coming off the sidelines, lower rates and more supply all could contribute to what could be a pretty boring year. The Greater Toronto Area, on the other hand, remains the exception. Prices in the GTA are expected to fall about 4.5% throughout 2026, largely due to higher condo inventory, softer investor demand, and slower absorption rates, continuing the downturn we've seen in the GTA throughout 2025. Markets like ours are of course affected by the GTA, but tend to sit a little bit in the middle. We're affected by Toronto because buyers relocate for affordability, equity flows outwards, and investors look to markets like ours for better opportunities. When a market like the GTA cools, it definitely affects secondary markets like ours, especially for certain property types and locations. But we have a pretty strong local market with local jobs, incomes, and local end users, not just investors and buyers relocating for affordability or retirement. We also have way less condos. On the interest rate side of things, it seems like Bank of Canada has switched to a wait and see phase, with fixed mortgage rates now stabilizing in the low 4% range. This brings more confidence to buyers, knowing that they don't need to rush into a property, but also that they don't need to necessarily continue waiting when the right property comes up. Confidence tends to build slowly in the real estate market, and it seems like that's what we're seeing. The takeaway from this report is that 2026 looks a lot less like big swings and big moves, and more about a boring balanced market. Canada's stabilizing, the GTA is still adjusting downwards, and markets like ours are quietly finding their footing. We'll see how accurate this report is as we progress through 2026 and all the unexpected things that could happen. Thanks for watching, and see you next week.